Dun dun dun! The cryptocurrency market is currently pulling back, and we're going to be putting everything into perspective in this jam-packed daily cryptocurrency market update. I'm wishing you all a triumphant Tuesday. And as always, if you are new to this channel and finding yourself on my videos for the first time today, don't forget to check out that subscribe button because we drop an update just like this one around 1 p.m. UK time every single day to help you guys stay up to date with the latest and greatest things happening in the crypto space, but also the broader markets. That's exactly what we're going to be doing in this video. We're going to be starting things off with the Bitcoin chart and addressing the current price action that we are seeing. Yesterday, I think, was the biggest day of outflows for the GBTC ETF, which is Greyscale's spot Bitcoin ETF. We're going to be covering that. We're also going to be looking at CoinShares' weekly report that actually saw the biggest inflows into digital assets really to date. And we have seen the same kind of volume in regards to inflows, in regards to, how many times can I say in regards in this video, exchange traded products in the first 2 months and 19 days that we saw in the whole of 2021. So we really don't think there's much reason to panic. Yes, Bitcoin is selling off. In my opinion, it's going to find its feet. This is either, depending on how you want to look at it, a great opportunity or a time to sort of hold for a little bit of volatility. But we'll summarize all that when we look at the Bitcoin chart. We're then going to be talking about Fidelity that are doubling down on their Ethereum ETF and actually insisting that staking is a part of it. The SEC has actually been hit with sanctions for being overzealous in regards to regulations. We are going to look at that and, of course, look at Paul Grewal, who is the chief legal officer over at Coinbase's take on all of this. And the SEC has well and truly overstepped their mark when it comes to crypto. We all know that. Let's start things off and let's dive into what's happening with Bitcoin right now. If you're new to the space, if you're haven't really got the experience in regards to this space and living through the volatility, well, you're learning today because Bitcoin, I believe, is down around about 5.6%. And when you put it in perspective, there's zero reason to panic. There really is no reason to panic whatsoever. Bitcoin has done exceptionally well since we got back into the market down here. And you are going to have pullbacks along the way. But knowing where you're at and understanding where you're potentially going is key. So if we put our drawers on, this has very much been compliant. It's still compliant today. When you get to an all-time high, you always get some sort of, typically, not always, 8 times out of 10, get some sort of a reaction. So this should have always been expected to act as resistance. Since you put your toe above it, you can see you did. And if we drop down the smaller time frames, there is actually bearish structure there. But remember, this is a bull market. So you can see we did pop out of a falling wedge. This was in new all-time highs and we're coming back. There is the scope for a little bit of further downside. But the thing is, when this market turns around, what will happen is everyone will be going, oh, I wish I bought that dip, but I thought it was going to go lower. This is just normal volatility in the crypto space. And when you have a zoomed out view like what we try and teach on this channel and you look at it from this perspective, there really is zero reason to panic or be concerned, in my opinion. This is just a normal day in the crypto space. Bitcoin is getting hit hard. Altcoins, obviously, particularly harder. And a lot of the altcoins that we have, we never really got a proper retest for. If we use HBAR as an example, you can see you are now at that level of support. ICP is another good example. It's not quite at its support yet, but it could be, you're just in this period after a breakout where you're sort of coiling up ready for that continuation. And Bitcoin, of course, is filling that narrative. And it's not just Bitcoin that was at all-time highs in regards to the dollar. It was also at all-time highs in regards to the SPY. Look at where that ran into. Look at where it pulled back. Tell me that technical analysis doesn't work again. And also the NASDAQ. And, of course, gold, which has been having quite a good day yesterday and this week. Not so much today because we do still have a strong dollar. The dollar is the flip side of everything. And I do think the dollar is going to roll somewhere here. We will see, though, however. It did find support where we were kind of expecting it to find support. Does this extend and take out this high is going to be the real test. And the dollar, in my opinion, is still in a broader downtrend. It's just being a little bit stubborn, albeit. So, zoom out. There's absolutely no reason to worry. That's kind of what we're here for, I guess, on Allincrypto, is to kind of quieten down the noise. It's always, you always see Capo trending on Twitter on days like this after being short from like 15K to 70. There's no need to panic. When you put it into perspective, even on a non-log scale, you know, it's really not that bad at all. You're just doing what you do, essentially, when you approach levels of significant levels, certainly key levels of all-time highs. You know, if we look at NVIDIA, for example, you know, this didn't really do too much, but there are plenty of examples. If I show you some of our stage twos, like semiconductors, you can see what this did around its highs. It put a toe in, then sort of consolidated, came back to its 30-weekly moving average before bouncing off it. Remember, you are going into the halvening. I think the halvening is something like 40-something days away. Pull up our brave new liquid coin index. You can see where we are. And this is the first time Bitcoin's gone and put in a high pre-halvening. It's a bullish environment all around. You are just having a pullback, and it's not just against Bitcoin and the dollar, or it's not just against the dollar, it's against most cryptos or other assets, which was all technically signaled. Altcoins just doing what altcoins doing, getting hit particularly hard. I do think we're on the cusp of that whole ETF, Ethereum ETF, coming to fruition this year. Let's talk about a little bit of news now, guys, because we've sort of spoken about the price in a little bit of detail. Let's start things off with what could be behind the price action that was sort of technically signaled. And that is the biggest outflows for GBTC thus far. So Greyscale's outflows are 643 million. Now, there could be a number of reasons behind this. So we know that within the FTX lawsuit, there's a lot of GBTC. And they're looking to sell that, essentially, to repay or restart or whatever they're going to end up doing. There's also still a little bit of arbitrage. So people will look to take profits at key levels. You know, Greyscale have obviously seen a significant move out of their fund. They also have higher fees than the likes of BlackRock and other people like that. So this could be sort of the fundamental news that's behind this. However, more broadly, and we pay attention to CoinShares Weekly Report, we think it's brilliant. It correlates all the sort of ETPs, exchange-traded products that are out there, and the ETFs now in regards to crypto. You see another record broken with $2.9 billion. And this paints a broader picture, just like looking at MicroStrategy. Sorry to jump around here, guys. Let's pull up MicroStrategy. Like or love Michael Saylor, you know, he's done very well. Who's buying MicroStrategy with this volume? It's not retail. Who's using exchange-traded products? It's not retail. And you can see this was another massive week of inflows. This week we might see outflows, but this is positioning for what's to come, in my opinion. Digital asset investment products saw a record weekly inflow totaling $2.9 billion, beating the prior week's all-time record. This week's inflows have pushed year-to-date inflows to $13.2 billion, smashing the full 2021, which was the bull. By the way, guys, that was, we won't use MicroStrategy. That was this period, smashing the sort of inflows that we saw in the raging bull market. Smart contracts suffering last week with Ethereum, Solana, and Polygon seeing outflows. And I think there was a few altcoins like Polkadot and a few others that actually saw inflows. If we look here, you can see Polkadot saw inflows, Cardano saw inflows, BNB saw inflows, Litecoin, but Solana outflows and Ethereum. Very interesting. So even though Greyscale are selling, in terms of digital products, things look great. In terms of digital asset inflows, things look great. And I think this supports our kind of bullish narrative. Yes, you're having a bit of volatility right now for Bitcoin, but that's part and parcel of the course. And if you can't handle the heat, you shouldn't be in the kitchen. You know, this should always have been expected as a reactive level. And it's doing exactly that. And that's causing a lot of volatility for the altcoins. This is why we always get the question, why do you tell people not to trade? Well, because I think you're going to lose money doing it. Certainly if you've got leverage in the crypto space, you're going to get, and I've done this a million times, by the way, I'm speaking from experience, you're going to get something right, and then you're going to end up in a period like this where you're too over leveraged and you blow your account up. That's why you should just invest, understand the bigger trend, which is an uptrend, not just for Bitcoin, now for altcoins. Get on the right side of it and make your money in the sort of sitting in the move. To move on in regards to news, we've got quite a heavy news day, actually. Fidelity not giving up on Ethereum ETFs and not giving up on the SEC allowing them to stake with the ETF. Brilliant. Our base case is still that these aren't going to be approved. Okay. And this is what has been put forward. So according to the registration statement, the sponsor may, from time to time, stake a portion of the fund's assets through one or more trusted staking providers, which may include an affiliate of the sponsor staking provider, likely Coinbase, by the way, because they use Coinbase. Coinbase also is still in a lawsuit with the SEC that we think gets resolved. In consideration, more on the SEC in just a second, for any staking activities in which the fund may engage, the fund would receive certain network rewards of Ether token, which may be treated as income to the fund as compensation for the services provided. So, interesting. Does that mean that they're going to keep the rewards? Or does that mean they're going to distribute them to the... Because they're saying as compensation for services provided. This is the problem when you implement these middlemen, which crypto sought to eradicate. They start taking slices of the pie, and that means you get less and less, and you already get screwed in every single manner. If you live in the Western world, you are getting taxed to death. It's not just your income tax, it's your capital gains tax, it's the tax you pay on every single item of goods that you consume. Meanwhile, the government's obviously trying to help you out and do certain things to make you richer, so they say, or better off, or increase the standard of living, make sure we're all a little bit more equal, whilst what they mean by making sure everyone's equal, because equality kind of doesn't exist in the world, what they're trying to say when they say make everyone equal is make everyone equally poor. That's what they mean, not equal in terms of bring everybody up, bring everybody down in the name of equality. That's what they try and do. And I know someone's going to get probably quite triggered about that statement, but it's true. So the next little bit of news I want to cover, you guys, is the SEC hit with sanctions for its gross abuse of power in the debt box case. The SEC, I think, have massively overstepped their boundaries. It's a power grab for them. It's a land grab for them. It's why they've sort of called everything out, but not gone after everything directly, and they've gone after big players. The SEC initially conceded. It's misled the court, but argued a sanction wasn't appropriate. They have actually now been sanctioned. A United States District Court has imposed sanctions on the Securities and Exchange Commission for acting in bad faith in the lawsuit it brought against Debtbox. I mean, look at what these guys have got going on with Prometheum. And Prometheum actually are now calling Ethereum a security because they're a securities broker that the SEC has given a special license to, the only one, by the way. Not the company Coinbase that they allowed to go public knowing full well what they were doing. Talk about shenanigans here. So the SEC filed a motion to dismiss without prejudice, but that was denied by Judge Robert J. Shelby, who slammed the regulator for intentionally lying to the court about evidence it obtained to secure a temporary restraining order and freeze of Debtbox assets last August. So Paul Grimwald has or Gremwall, where am I getting that from? Is that a Harry Potter trilogy thing or whatever it is? So Paul Grewal.eth, the commissions above discussed conduct constitutes a gross abuse of power entrusted to it by Congress and substantially undermining the integrity of these proceedings and the judicial process. The operation of the American judicial system rests on the fundamental proposition that every party who comes before the court is bound by and adheres to the same set of rules. Ooh. Okay, let's read on. For reasons explained below, the court imposes sanctions against the Commission for bad faith conduct in obtaining, maintaining, and defending the TRO, and denies the Commission's motion to dismiss without prejudice to refile in accordance with the District of Utah's local rules. The Commission above discusses conduct constitutes a gross abuse of power entrusted to it by Congress and substantially undermining the integrity of these proceedings and the judicial system. Wow. And he goes on to say the worst part of it all, guess who pays the sanctions? Wait. Wait, surely not. Surely not. So, huh? I'm confused. The commission just foisted, whatever that says, a bill onto every one of us. So let me get this right. This is equality for you, right? Somebody else does something wrong, you have to pay the bill. That is their version of equality. I'm sorry I'm going on a bit of a rant today, guys, but I am. Wake up. You know, this is insane how badly people are getting done over. And this is in the United States. No better in the UK, guys. I'm from the UK, in case you can't tell. Maybe I'm not British enough. But I mean, I didn't actually know that was the case. I'm kind of shocked reading this as I'm recording this video. So the worst part of all this is the SEC do something wrong and essentially do something not at your benefit, but for their own benefit that kind of hinders you, just like them not allowing people in the US to trade certain cryptos because they have the say over that. And they do something wrong. They abuse their power. The taxpayer picks up the bill. You guys pick up the bill. And at this point, why the hell are we paying taxes when they just print money? Crazy world we live in. Anyway, that's all I've got for you guys. So lots of news today, lots of interesting news that we've gone through. We are planning on doing live streams, not next month, but the week, the month after. So not April, we're going to start live streams in May. It means you guys are going to be able to interact with me. We've got lots of interactive things coming. In regards to the price, just to close on that, because it's always good for me to kind of maybe be a little bit of a voice of reasoning as somebody that's been in this space for a long time and that's done very well from it. You know, this is just part and parcel of the course. This is just volatility. Expect it. The good, you got to take the smooth with the soft, or you got to take the hard with the soft, or the rough with the soft, whatever it is. And if you guys look at when we got back into the cryptocurrency market, and all of this is public, it was down here. Where are we? January the 5th. It was literally here. And we had to ride this out. Okay, it looks great on the total market cap, but it was very volatile on the total too. So that is really all I've got for you guys. On that note, I'm going to love and leave you. Let me know all your comments in the comment section. It's just another day in the cryptocurrency space. It's still a wonderful time to be interested in this space and a part of it. And I'm wishing you all a wonderful Tuesday, and I look forward to seeing you all in the next one. Thanks a lot for watching, guys. See you in the next.